GM everyone, and welcome to Smart Contact, an interview series with the world's most influential and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle. Like and subscribe for more Smart Contacts. Welcome to another episode of Smart Contact, produced by Web3 Harbour. I'm Gary Liu, co-founder and CEO of Terminal 3, and the chair of Web3 Harbour, and I am your host today. We are recording with a live audience in Singapore, and today's Smart Contacts are Elise Soucie, Executive Director at Global Digital Finance, and David Katz, Vice President for Strategy and Public Policy Asia Pacific at Circle. Thank you both for joining us in today's conversation.
Thanks for having us.
Yeah, excited to be here.
We're going to jump right into it. And I want to start with both of your stories. Let's start with Elise and then let's go to David, because I think both of your stories are really fascinating. Increasingly in this world of digital assets, we are finding people that are from varied backgrounds with extraordinary experience, deciding that decentralized technologies and digital assets is where they want to be to help evolve and improve the world. And the two of you guys absolutely fit that mold. So Elise, I want to start with you. Graduate of University of Chicago. Are you from Illinois? Are you a Chicago native?
I am a proud Midwesterner.
Okay, proud Midwesterner.
But also an expat. I no longer live in the U.S.
That's exactly the point. You're a proud Midwesterner, and then you ended up in London at the United Kingdom's financial regulator. How did that happen?
It was 100% an accident.
You went on vacation and then just forgot to go home.
No. So, and actually David and I were just talking about this. When I was still living in the U.S., I thought that my whole life and my whole career was going to be counterterrorism work. So that is very much something I was so passionate about, and I still am, was geopolitical conflict and tension and how we reduce that in the world. And all throughout college and after college as well, I worked for a think tank and we researched attack prediction and prevention. And a lot of the work that we did was fed back to agencies in DC. And I loved that. Though I'm also sure that if any of you guys have worked at a think tank before, you also know that there's only so much you can do at said think tank. I had pretty much done every role there was to do at the think tank. And I loved it, but I wanted to figure out kind of what was next for me in my career. And I was considering a move to DC because that's the very natural career progression, as I'm sure David knows, if you want to work in counterterrorism. And I was from the Midwest. I didn't have a lot of DC connections. My dad was a farmer. My mom was a middle school teacher. I did not have a network there. I didn't know people in New York. And I wasn't really sure if I was ready to make the move, frankly. I was really nervous about it because DC is a very networked city. And I was nervous about that. And so I decided to take a career break. And I'd studied and I'd lived in Paris before as well. And so I really wanted to go back to Europe because I just loved it. I loved the European lifestyle. And so because of that, I was like, I'm going to take a career break. I'm going to go and do a master's. I was still doing the same thing, geopolitics, security studies. But I was like, I'm just going to take a year out and frankly try to figure out what I want to do. And while I was in the UK, I realized I'd made a critical error, which is that I couldn't do counterterrorism work in the UK because I didn't have the security clearance for that because I wasn't a UK citizen. And I also hadn't lived there for 5 years, which is pretty much the mandate if you want to do any counterterrorism security related jobs in the UK.
Thanks for explaining that to us, because I don't think that's an expertise.
But that is pretty much a criteria for everywhere. And so, I was like, ooh, well, that's definitely ruining my plans to stay in London. And so I pretty much panic applied to 30 different jobs that would sponsor my visa. That was literally the strategy. The first time someone told me about the FCA, the Financial Conduct Authority, I was like, so is it the SEC in the UK? And they were like, not really. And I was like, is it the CFTC in the UK? They're like, also not really, kind of a different thing. And I was like, I mean, whatever. They seem to have this cybersecurity job, so I might as well apply. And genuinely, that was how I ended up in regulation, because I was like, okay, it's still security related. I can still look at stuff that's related to threat intelligence, but it's banks. But and genuinely, all my friends will say this. It genuinely was an accident. I ended up at the financial regulator, and I used to always tell everyone I would never work in finance. And so this just goes to show you should never say that.
And so at some point when you're at the FCA, you started touching digital assets. How did that transition happen?
Also kind of an accident. So I was, as I said, I was in the Tech Resilience and Cyber Division at the FCA, loved it, did a lot of work around CBEST testing. So look, that's, basically when a regulator will mandate that a bank do red team testing internally to check their cybersecurity controls. And I went over to the international division of the FCA towards the end of the Brexit transition period because I wanted to get back into policy work. And while I was there, they kind of reshuffled everything after Brexit. And they were like, you were in the tech division before. Would you like to now do some work on crypto and digital assets? To which I said, I don't know anything about crypto and digital assets. That sounds terrifying. Are you sure? They're like, again, you were in the tech division. It'll be fine. And so that was how I got into digital asset policy and regulation. And I did a lot of research and I tried to upskill myself as much as I possibly could. I learned from a lot of really great and smart people at the time. Self-admitted to watching Gary Gensler's lectures when he was at MIT, which didn't age well. But, I was really trying to think about how could I upskill myself as a regulator. And that was how I got into crypto and digital. It was a gentle push, but I'm really glad to be here.
Oh, we're very glad to have you here. We will get to global digital finance in just a minute, but let's jump over to David. David, you've also had an incredible career. By the way, note that I did not mention when Elise graduated from University of Chicago because I don't want either you nor I to feel bad about ourselves.
Thank you for that.
You're very welcome. It's not just for you; it's also for me. You started off. You've been through. You worked for the State Department as a diplomat for many years, traveling around the world as an economics officer. Then you ended up working at the White House at the office of the U.S. Trade Representative during some incredibly critical years of free trade agreements, especially in this part of the world. The last great run of globalization you kind of presided over, you worked on.
When you say the last one, that is actually that makes me feel really depressed. Not the
last
ever, surely.
The most recent one that we wish we could go back to maybe. And then, of course, now you're in public policy. You've been at Circle now for a year. Talk us through how each of those stages of your career, and maybe now this is just revisionist history, but make it sound great, how each of those steps in the career eventually led you to be in policy in digital assets.
Sure. No, thanks. And first, thanks for having me here. And I think one of the things that I had an opportunity to learn really early in my career as an economic officer was the interrelationship between policy development, implementation, and business. And both from the perspective of what it means for U.S. international companies, and then for the places where I was posted. So I was based through my career in Taiwan. I did a lot of work in China, in Mongolia, and actually in Singapore before moving over to the Secretary's office, working for two secretaries of state, Madeleine Albright and Colin Powell. And as I say, it's that really to see kind of having companies come in to embassies and express where they needed help, where they were seeing benefits being delivered, and frankly where they were seeing obstacles. So that was kind of lesson number one, that governance and the quality of policy. I wouldn't call it a one-for-one relationship to business success, but it's clearly related, and that was kind of lesson one. I think I had then the opportunity to move over to USTR, Office of the U.S. Trade Representative, and really a play in 3 acts there. Did a period of time on investment policy, so negotiating bilateral investment treaties, then working on ASEAN and Southeast Asia and APAC policy, and lastly on China policy directly. And I think the arc of the learning there, again, really had to do with bilateral and multilateral frameworks, how they could have a bearing then on kind of creating the backdrop at a macro level for really how whole sectors could operate. And I think that was incredibly instructive to me to really kind of have that opportunity. And then the last opportunity was true multilateral. You didn't mention it, but I actually spent almost 3 years at the APEC Secretariat here in Singapore, working on harmonization of policy and really trying to build more coordinated policies across all of the 21 APEC member economies. Again, this is when globalization was like a happy word.
When it was cool.
When it was cool. I think when people, there was a consensus that there are real benefits being delivered by globalization. And so really that kind of formed a basic understanding, if you will, of the benefits that can be delivered, but also, frankly, how hard it can be and the time-bound challenge of it. And this is what I think when I moved over to the private sector, and this also was, really I had a chance, I'll go through that in a moment, to kind of then recognize early in my time working on policy in the private sector that one of the fundamental challenges of people who work on policy and for companies is there's a mismatch in the speed that business wants to move and the speed that governments tend to move. And so that's just it's oftentimes a huge pressure point. And for those of you who work either on policy or frankly, if you're a business development person directly, wanting to see policy change, I think we all feel that pressure. We want governments to move quicker. And so in the private sector, I think one of the things that really helped lead me to Circle was an opportunity first to work for Visa, which, in a sense, you might call it like the OG of fintech, in a sense.
For sure.
Right? I mean, it was the first one to kind of provide credit and debit, along with a few other big players, that really changed people's relationship, that kind of started to put the end to the writing of checks and the paying of cash, right? Moved from Visa then over to PayPal, where you then kind of had the movement of those transactions online, kind of the Web2 type world, where you didn't need a physical form factor anymore and you were able to enable e-commerce. And spent a fair bit of time, by the way, at KKR, almost 7 years there, and that was a very different environment. But then the opportunity then to move to Circle was really then the opportunity to kind of continue that journey on the moving payments from card to digital to full digitalization, full programmability that we now have the opportunity, I think all of us in the room are so excited about, to not only enable the benefits that I think stablecoin and digital assets bring in terms of the speed, the transparency, the cost advantage, but I think the maybe just on the horizon excitement in my mind is the programmability piece that is going to enable a whole range of new capabilities and transactions that I think are going to be really, really exciting.
We will definitely get to the programmability of stables and actually all other digital assets and why it increases efficiency, what we believe increases efficiency so much in financial infrastructure. There wasn't that much of business history necessary. I think that besides your KKR years, which obviously were just about money, I'm kidding. There's a very clear thread in your career, and also very glad that you're in this industry and serving the evolution of digital assets. Elise, okay, GDF, Global Digital Finance, one of the most important trade associations in our industry. You guys set standards, will help to set policies and standards around the world. Policy and regulatory harmonization seems to be the mantra of GDF in many ways. We follow you around as an industry going jurisdiction to jurisdiction, event to event, because I really truly believe that GDF has been carving a path for the rest of us to walk through. So with that hat on, I want to ask you I actually think a relatively critical first question, but also probably one that's not easy to answer, which is this difference between trustless and trusted. That in our industry of Web3 and decentralized technologies, we're constantly using this term trustless to mean the best possible form of technology, of the value that decentralization brings, because we do not need to know one another, our counterparts. We don't need to worry about trust because the technology has trust inherent. So we call it trustless. But then when we start talking to regulators, that word does not fly. Just the same way as anonymity does not fly with regulators because they only want to talk about privacy. But now we have to start talking about why these technologies are trust technologies that provide infrastructure that are trusted by all parties. What is the actual difference in definition between those two things? What is this gap of expectation that exists between the Web3 world and traditional finance, especially regulatory world, that we are so desperate to bridge right now?
Well, first, obviously, thank you for saying all those nice things about GDF. It's lovely. And obviously, we love working with our partners at Web3 Harbour. And, the stuff that you said about all the places we're going around the world and work we're doing, we wouldn't be able to do it without partnering with people that are on the ground everywhere, because we cannot be everywhere at once. And we learn a lot from our partners in various jurisdictions. So first, thank you for that. But, to answer your question, which I think is a really tricky one, so I will do my best. But I think, when you start, first of all, I think that trustless is probably not a great definitional term. And I think that what I would first start by saying is that I think that the crypto and digital asset industry is sort of plagued with terms like these, because when you think about how this industry evolved and the way the terminology evolved, a lot of times these terms were coined by brilliant coders and brilliant developers, and they weren't necessarily thinking about how those terms would land with regulators. We also have a ton of abbreviations in this industry that, get changed and made up all of the time. And so I would start with that, which is that I don't necessarily think that trustless is like the best term. It's obviously too late to change that now. But I think, to come back to your point about how do we bridge that, I think we need to start being a lot clearer when we're having these conversations with regulators, because that comes down to the crux of it, which is that, obviously we have these decentralized technologies. We have seen many, many, many evolutions in terms of how decentralized technology is being used across financial services. And I won't go into all of the use cases, but I think at the end of the day, from a regulatory perspective, regardless of the technology that's being used, if you're offering a financial service or product or activity, you do have to adhere to certain financial services guardrails. You do have to meet certain regulatory expectations. And if you want to interact with, in the intro, they mentioned several institutional players that are also part of this ecosystem. If you want to interact with institutions, you have to meet their standards for when they're working with regulators as well. And so to come in the middle of trustless and trusted, I think that it comes down to clarifying what we mean by that. And, for example, a great example of trustless technology is obviously zero knowledge proofs, where you can actually meet the expectations of certain things. Are you a terrorist? Are you a money launderer? Is this sanctioned activity? Does this flag up on any of these things? Zero knowledge proof can tell you yes or no, if that data exists. And, or an even simpler example, checking digital IDs, which I'm sure we'll come to. Are you above the age of 18? Are you above the age of 21? It will just say yes or no. And, that's actually something that you can trust. It's not that it's completely eliminated. And I think that's what, we need to be clearer with our terms when we're explaining this to regulators. The second thing I would come to, though, is that obviously while zero knowledge proofs have been very widely deployed, and there are other great examples of decentralized technology, we also have to make sure that we are demonstrating their efficacy and their trustedness to regulators. And I think that that's not necessarily always something that is, one, easy to do, but two, I don't think it's always been done. And I think that there have been several issues, obviously, as well in the industry where things have purported to be trustless. They have not been. They've not been using either the right technology or using it in the right ways. And that also erodes trust quite a bit. And so I think that there's, obviously a responsibility on regulators to be educating themselves, learning about new technologies, figuring out, does this meet our thresholds? Can this meet our resiliency thresholds in a new way and in a better way, actually, in a lot of cases? But also on industry, I think it's important to remember that regulators are not the brilliant coders and developers. They're people that know a lot about law and regulation. And so we need to meet them where they are and actually be able to demonstrate that, yes, this can meet regulatory objectives. Yes, the technology can be trusted, but let us show you how. Don't just take our word for it.
And I've been in the tech industry for 20 years, and without a doubt, decentralized technologies are the hardest technologies to explain. Right.
And we do a really bad job.
And we do a very bad job. So David, let me ask you, in all of your interactions with regulators, what is it about decentralized tech that you still find they fundamentally misunderstand? Or maybe we're at a point in 2025 now that regulators have actually caught up and there are no fundamental misunderstandings.
Yeah, look, so I think it's a really important topic. And I think it's really interesting to focus on the technology, and it's interesting to focus on the rules. But I think there's a missing piece that we haven't talked about that I think is actually critical to solve the equation. And that's the trust agent is really, okay, it's fantastic. And I'm not a technologist, but I really appreciate being in this industry where there are a lot of really, really smart technologists who can program the heck out of tokens and do amazing things, right? And we can absolutely align that because it's programmable with the rules that regulators write. And while it's still an evolving conversation, regulators, I think, are coming to understand a bit about the technology and how it works and how a zero knowledge proof can be an effective tool for addressing verification, identity, and other important elements to a transaction. So that solves two of those pieces. You have regulations and rules that you need to meet. You have a technological solve that you have smart people that can program and initiate. I don't think human beings, like I'm going to go back to first principles, are yet ready to completely turn over their faith in just technology on its own as a standalone. There may come a day when we're going to talk to an AI avatar and we're going to be happy with the answer that gives. But I think trust agents are very important still to the ecosystem, and that's where brands, companies that stand behind the solutions. And it's why, for example, from a Circle perspective, we're so excited about like Arc, our latest layer 1 blockchain, where we've actually integrated in a whole series of technological proofs that people can build on top of to actually provide that assurance. But I think the two are important to go together. You have the technology, but then you have a company, a name, a brand that people can trust, and that regulators can also call to account if they have a question about it. It's very important. So I think those three pieces solve the equation of the question that you're asking. It's the technology combined with the regulations that make sense, with trust agents that work together with the regulators and the technology that then ultimately consumers, customers can generate that combined trust in the technology and the trust agent that we can then scale this ecosystem and really build an industry together.
Okay, I'm going to put on my hat as a technologist for this conversation.
Sure.
Because the challenge that I'll make, and this is what you're going to hear from anyone who is building decentralized tech, is that the entire point of decentralized technology is that the trust agent is no longer needed. And in fact, they would argue, and at times I would argue, that trust agents are absolutely fallible. That is actually part of the brokenness of our existing system, that we are relying on institutions or individuals to be trust agents for these global cross-border networks. And when one fails, entire systems come crumbling down. And and by the way, that it's those trust agents, and because of the necessity of those trust agents, that have kept this technology or the actual financial systems from being equally valuable to everyone around the world, because only a small subset of the world's population can access them because of the need for these trust agents, right? So as a technologist, that's what I would say is that, oh man, are we really still talking about trust agents? The entire point of this technology is that we don't need them anymore.
Yeah, and I'm not saying you're wrong. What I'm saying is I think there are people who will absolutely adopt this and don't need an intermediary as a trust agent, right? But I also feel there are a lot of people who will say, yeah, I think I want to work with someone who I know is standing behind this. If I have a problem, there's a helpline or I have a relationship manager that I can work with to address my needs. And so I think these are two sides of the same coin. They're just different ways of solving market need. Some people will live completely in a DeFi world, and there's technology that they'll feel comfortable with. There'll be other people who will want someone, in effect, to bundle that for them and be that trust agent along with the trust technology just to meet their needs.
At least I see steam coming out of your ears.
No, not quite steam, because I'm going to land somewhere in the middle, actually, but it is maybe a slightly controversial thing to say, which is I think the problem with what you're saying, and I actually agree, the technology can do it. That's great. I think that the issue is that if we're trusting the technology, and let's say this is on AML reporting, right? We're trusting the technology to do the AML reporting, and that's great. And let's say that there's even more transparency and you don't have an agent in between, and actually your regulator is a node and the AML reporting goes directly to the regulator. No more regulatory portals that you upload these reports into and then the supervisor checks them. The regulator gets all the data directly. That then also makes the regulator liable, potentially. I'm not saying that they necessarily should be, but that's what they're going to be worried about, is if they're the recipients of all of that data, the yes/no data from those zero knowledge proofs, then there's a responsibility on them in a certain sense as well. And I mean, first of all, do we want regulators to have the responsibility? Do we want firms to report? Kind of a little bit of a question in between. But also, I don't think we're necessarily ready for that either. And I don't think that regulators necessarily want to do that either. And I don't even necessarily think that's a criticism on them. Their governance models aren't set up to be repositories of vast amounts of industry data yet. Their technology systems are not set up for that yet. And so while I do think that you're right, like, you know, as I said, I used to work in cybersecurity, and the most fallible element every single time is the human. Every single time, like without failure, or legacy systems, but usually the human. So I do think you're right, but I think that, to your point, having the trusted agent or trusted reporting firm in the middle at the moment is just like realistically where we are in the market.
Sorry to interrupt, but I want to tell you about our Smart Contact lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now back to the conversation. Let's use a specific example to go deeper on this. Let's use identity. Elise, you brought it up earlier. Because identity is a great example. It's an example that anyone listening to this podcast can understand, because we all have a sense of what identity actually means. I'm not talking about, how we describe ourselves, but literally how we verify who we are, especially in the digital world. Identity, of course, is very close to my heart, because Terminal 3 is a data privacy company that works on identity infrastructure for governments and large regulated enterprises. And we do recognize that it's a very, very hard problem to solve for, and yet the opportunity today is greater than it's ever been, because we now have emerging technologies that allow us to do a bunch of new things we've never been able to do before. So let's use that as an example. Identity verification, historically, in the digital world, is all about sending data from one place to another. That's what it is. Identity verification is data transference. That's what identity verification actually is. And then having the same data be available in multiple different places so that you can match that data and say, okay, this claim of identity is accurate. That is what has slowed down so many things in our world, where financial infrastructure, the throughput that it has today, should mean that we should never have to wait for money. And yet, we're constantly waiting for money, right? On average, any kind of bank settlement is still T plus, 3 at this point? And so we're still waiting multiple business days for things to settle because we are having problems sending data. It takes time to encrypt, to send, to decrypt, to match, and there are always lots of human beings in the middle. Not to mention KYC, by the way, which is, it feels still so archaic, even with all the eKYC options that we have today. You can do it all by phone, and yet it still takes so much time to prove our assets over and over and over again. The lost opportunity cost for individuals, retail consumers, or the actual businesses that are serving us, it feels almost ridiculous. Now new technology should allow us to paradigm shift all of that. So, where is the understanding gap that has still led to policies and regulations which do not allow the digital asset world to take full advantage of decentralized identity and the instantaneous verification, which removes all of those barriers? What is that gap that we've been talking about, right? If we still need a trust agent, what is still missing that doesn't allow us to actually trust the technology that's available?
I can start. I mean, I think that the biggest gap in getting digital ID, first of all, we've done some great work on digital ID for businesses already, like LEI. I've spoken to the legal entity identifier, the GLIFE Foundation. amazing work on getting identifiers for businesses, and they have the digital LEI, which is like rolling out now as well. So I think we are
awesome if it were adopted at all.
Correct. Yes, I know. But I'm saying like there is potential there. I think that my comment was actually going to be more on ID for individuals, which is I think that the blocker there is frankly political. I think that digital ID is an over-politicized topic, and that makes it quite controversial. Not in every jurisdiction, but in a lot of jurisdictions.
What do you mean by over-politicized?
It's because people are afraid of government surveillance. And so they say they don't want a digital ID because they do not want the government to surveil them. And because there's a lot of pushback on this, political parties don't want to be the government that advances pushing forward and pushing out a digital ID because they think they'll get a lot of pushback from individuals.
I will say this is obviously a very UK point of view in particular.
Not just the UK, US as well. And, it's not just the UK, but I'm saying that there are many jurisdictions where that's not a popular thing for a government to advance.
Okay. Yeah. David?
Well, first of all, I'd echo your point on the work of Glyph Foundation. So I had a chance to be a judge on a hackathon they did on a VLEI and the development of innovative approaches. So I do think there's a lot of our earlier conversation on technology development. I think there's a lot of really exciting developments in the works on legal entity identifier that are digital that will be very enabling to the ecosystem, number one. Look, I think the question that, Elise, that you're raising around individuals and their own identity, I think there's two elements. The first is whether this is something that gets required and mandated by governments, or if this is an opt-in because people want to take advantage of commercial convenience. And I think that what the internet has consistently demonstrated is that many people, not everyone, are often willing to, I don't want to give up privacy is too strong a term, but they're willing to participate where they have to give information about themselves in order to enjoy the benefits that the internet delivers. And I do think that there's a long runway of opportunity for the entire business ecosystem in digital assets to kind of basically make the case that you want to opt in and develop your own identifier that's digital to have access to the convenience and benefits that it delivers, number one. Number two, I do think one of the critical elements that I think is going to be very important is this. We were talking earlier about zero knowledge proofs. I think identity is going to be a very important, opportunity for that, particularly to address some of the regulatory requirements around privacy. That if you think about GDPR and the need for data to stay in the EU, the ability then to kind of have a proof where you can keep the data private and in the EU, but still prove who someone is if they want to do a cross-border transaction, I think is going to be, really, really important to address.
And I think that feels like to me the irony of it is that we've mentioned zero knowledge quite a few times for our listeners. Zero knowledge is a type of cryptography. It's not new cryptography, but its application in the digital world is relatively recent. And what it is, it's just pure maths. It means that you can prove that you know a corpus of data without ever showing the corpus of data by answering simple questions. And so in identity, that means that I can prove, for instance, age, that I am verifiably over the age of 18 with unspoofable math without ever showing you a government ID that has my birth date on it, right? That's a very simple example. So to David's point, what this means is with all of the data compliance regulations and privacy regulations that are out there right now, we can solve for all of the problems that those regulations are there to protect for by using advanced cryptography. The issue is it's not accepted as a solution yet.
Yeah, but I have one quick answer to why I think we're there.
Please.
Right?
I'm racking my head. I'm trying to figure out why.
So I said this at the very beginning. You were asking me about some of the lessons I'd learned in my career path. The mismatch of time horizon. Governments move at one pace. Industry wants to move at another. And I think it's important to remind, we're still relatively early in this process. I mean, how long have we been at really formal regulation of digital assets that intersects with traditional finance? What, maybe 5 years? Yeah. And then you juxtapose that against how long it typically takes governments to develop and implement new policies. We've made huge progress in that time. So I'm with you. I think we want to get there. We want to get there as quickly as we can. And it's right to be impatient. But I'd also say let's be a little understanding and realistic that government tends to move a little slower. I think we'll get there. We want to urge government along. But it's not really that surprising that we haven't solved for everything yet 5 years into a complete transformation of the way financial services are delivered.
Okay, Elise, what's the time horizon then? And what do we have to do to make that time horizon?
Oh, I mean, I think the time horizon is going to be very different in different countries. So to come back to your point, I'm a U.S. citizen living in the UK. But like, despite demand, which by the way, I would love to have a digital ID. These are not my personal objections. I would love to have one. It would make my life so much easier. Despite the demand being there, and despite the fact that I would love to have one that I can use online, I can't because it's not accepted. And so to your point about government pace, you have to make sure that there's government mandated acceptance of it as well. Like, it can't just be, that you wanted it, you have the usability. And so, I mean, I heard someone say the other day, and this was with regards to just DLT in general, that we're about 10 years into a 30-year journey. And I think that's probably about right. Me. I don't want to break your heart, Gary.
Impatient technologist. That does, yeah. I mean, you're still going to be young in another 20 years. David and I...
Speak for yourself.
Yeah. We have the benefit of not having a camera on us for today's podcast. So, what do I think? I obviously want it to be faster. I do think, to David's point, I've been so impressed by financial regulators, especially in this part of the world in Asia Pacific, because they have moved so quickly in understanding, and then deploying that understanding in the form of policies and regulations that are imperfect, but are at least informed. And that is something that is shocking and new, again, to the technology world. It's usually not like that. And it just so happens that this is a technology revolution that I frankly believe, inconveniently I believe, requires regulation for the innovation to actually speed up.
Also, I mean, if there's any APAC regulators listening to this podcast, please go ahead with mandating the digital ID. Get it rolled out.
Well, we're in Singapore.
Set a really amazing example for other jurisdictions and kind of force their hand, because we've seen that with other tech innovations. If one country gets it, everyone's talking about how amazing it is. Other countries will follow suit because they're trying to compete, not just on innovation, but on policy too.
And I do think the one big advantage that we have in the kind of the Web3, the digital assets world, is that regulators in Asia and globally, I think, learned a really powerful lesson with the internet. That they went through this journey as they initially, there was a lot of resistance. I mean, you go back in the early days of the internet, oh, this is going to hurt bricks and mortar. We've got to slow things down. Maybe we should tax this or not. And then they stepped back and they allowed the internet to kind of really take off. And the benefits that were delivered to economies were just so substantial. And I think they learned that lesson that, okay, we might have questions, but they're allowing this industry, I think, and to their credit, regulators, it's not perfect, but in general, they're allowing this industry to begin to accelerate, putting in place the regimes, working hard to learn, and drawing on those lessons from the internet to allow the benefits of digital assets to be delivered. Now, the road won't be as quick as any of us in this room probably want, but I think we have to give credit where credit is due. We have come a long way. Look at all the tier one financial centers, for the most part, either have in place or putting in place regimes for stablecoins and digital assets, right? That's remarkable. 3 or 5 years into this journey, much more work to be done. But I think we should also acknowledge the regulators have done a lot already, and we're going to push them to continue to work faster.
And that is the context of this conversation, which is we are at this critical moment, and I think all of us feel it, where over the course of the last 24 months, there has been extraordinary regulatory progress in this part of the world for sure, and of course in the United States because of the Genius Act, right, earlier this summer, paired with now, and partially because of the regulatory progress, but paired with true institutional understanding of the value of digital assets and decentralized technologies for financial systems, and therefore a lot of latent, not only interest, but demand flow for it, which means that the capital and liquidity are really, really coming. I mean, just a stablecoin marketplace, the market cap has increased by about 12% since the Genius Act in the middle of July, and that number is going to continue to grow because there are the BlackRocks and the Blackstones and the JP Morgans and the BNY Mellons who have hundreds of billions of dollars, eventually trillions of dollars waiting to flow into the system. All of that makes this incredibly exciting, and yet what it also does is it makes the gaps more acute. It highlights what we're still missing, okay? So one last big question for this podcast. We keep claiming as the Web3 industry that this technology, this decentralized technology, can truly bridge this gap between, effectively, can create privacy and yet transactional transparency. Is that nonsense? Is that a narrative? Because that is the actual holy grail. That is what creates extraordinary efficiencies that we've never seen before, reduces the cost of every part of our financial stack, brings democratization of finance to the entire rest of the world, makes this world truly borderless. So all of these things are dependent on this narrative that we've been shouting, which is that decentralized technologies can bring privacy for all, and yet transactional transparency for efficiency. So, David, you seem sure that this is true.
I think this isn't an impediment. This is a major business opportunity, and it's one that I think Circle's committed to realizing. So, again, just 2 weeks ago, we launched the testnet of our ARC blockchain, which I talked about a little bit. One of the critical features that's built into this is opt-in privacy for commercial purposes. So blockchain provides transparency, but if you're a big company, you don't necessarily want your competitor to see what you're doing from a commercial perspective. So what ARC lets you do is you can mask critical elements from a business confidential information perspective on that chain. However, and this is the critical piece, you can also program in keys for regulators and law enforcement be able to look into the transaction if there's a suspicion that there's something incorrect there that they need to look at. That, in my mind, is kind of like the Goldilocks, just right piece. Privacy from a commercial perspective, but the ability for regulators to conduct their enforcement activities. I think that's the way you build assurance for the commercial side, assurance for the regulatory side, and really help the industry grow and scale.
Elise, go ahead.
I mean, I was going to maybe take a more middle of the road take, but also I haven't just built ARC, so I think it's fair. I think I would say that I think that it is possible. I always think it's important to caveat that just as much as technology can be used for good, it can also be used for bad. And so I think we can get there, but it's all about how we build it and how we design it at the outset. And those design choices, like the ones you were talking about, but also others, are really critical. And, you know, I think that a bigger macro comment, but, you know, we mentioned at the very beginning, is this the last era of globalization? In an increasingly fragmented geopolitical world, I think that those choices about privacy are going to look very different in different jurisdictions. And I think that there is the possibility that we don't get there in some jurisdictions. And I know that sounds a little bleak, but I think that we need to be realistic about that. And I think that the way that if we want this to work, if we want to achieve that, then we need to start thinking about how do we make sure we're embedding those first principles in both the regulatory decisions, that we're talking about them with the industry, but then also that the jurisdictions that are leading on this, and I do think, frankly, a lot of those are in APAC, start building those bridges through multilateral and bilateral agreements with other jurisdictions so that we sort of set the right tone and narrative for kind of achieving that as we continue to build out. Because I think just as easily as we can build for that great dream, we can build it pretty quickly in the other direction too.
Okay, my last question to the two of you guys then is on those first principles. What is one first principle that right now you believe is missing from the regulatory conversations happening around the world?
Look, I think it's going to be interoperability and really making sure that they're actively working to ensure that, understandably, each regulator is going to want to first and foremost address the needs of their market. That's critical. But ensuring that there's that active conversation to build an interoperability across systems is going to be critical. I think that's happening, but I think just keeping that top of mind will be really important to ensure that we have the ability to...
So programming interoperability into regulations from the get-go.
Yes.
Elise?
I think that mine would be, and I don't know how to explain this in a really snappy, principled way, but I'm going to try to just explain it, is that we need to build regulation around the technology that we have and also where that technology is then going. And what I mean by that is we need to not build regulation that is like, this is how we wish the market to be based on historic examples of financial services. What is the technology actually doing and what is its potential to do? And then how can we set the regulatory perimeters? It's not missing in every jurisdiction, but I think it's frankly missing from a lot of conversations because it's a strategy of containment because we're worried about risk. And so we're trying to regulate for risk. But that's not actually how you achieve the right aims and let the technology get to that trustless state. And so I think that would be my first principle, which is, I think, a little different from tech neutrality because it actually requires a deep understanding of the technology itself and regulating for, again, where we are and then where that technology could go.
David, how good would she have been as part of the State Department?
You could have been in my A100 class. That's the entering class for the U.S. State Department.
Thank you.
It's very rare that we ever get to say how much fun a regulatory conversation has been.
I will say that you told us before the podcast that you didn't want to talk about policy and regulation too much, which I think we totally failed at.
We failed at because you actually made it interesting and we could go on for a lot longer. But we have to wrap up the podcast. I've loved this. We should do a second version of this in another year because I think this world that we live in is going to look so foundationally different a year from even just another 12 months from now. And hopefully at that point, your 30-year time horizon will have reduced quite significantly, Elise. So thank you again to David Katz from Circle and Elise Soucie Watts from Global Digital Finance for joining us today. And thank you all of you for joining us and listening in to Web3 Harbour's Smart Context series. We will see you again next time.